Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 1st of February. Today, all eyes will be on the FOMC rate decision. The forecast is for the committee to keep its rate hike powder dry this time after raising rates in December. There is no press conference following the decision or updated economic projections, so the market attention will probably fall on the statement accompanying the decision. Considering that there has been further economic progress since the latest gathering, we believe that the overall tone of the statement is likely to be quite optimistic. Something like that could bring forth market expectations with regards to the timing of the next rate increase. According to the Fed Fund futures, the market is currently anticipating the next hike to come in June. Overall, we maintain the view that the most likely scenario is for the committee to hike borrowing costs only twice this year and not 3 times as the dot plot suggests, mainly due to the fact that the committee has turned more dovish this year and given the officials' concerns with regards to a strong dollar, as was revealed in the December meeting minutes. Staying in the US, yesterday the Trump administration took another shot at the US dollar after President's top trade advisor said that Germany is using a grossly undervalued euro, while the President himself indicated that other countries take advantage of America by devaluation. In our view, these comments raise speculation that the new administration will begin to focus on the value of the dollar moving forward. For now, though, considering that the major USD crosses such as euro-dollar and dollar-yen lie near critical technical barriers and that the Fed may appear optimistic today, we believe that we could see a rebound in the greenback. Dollar-yen traded south yesterday, fell temporarily below 112.60 but hit support at 112 and rebounded back within the range it has been trading since the 11th of January, between the support of 112.60 and the resistance of 115.50. As a result, we still consider the short-term path to be to the sideways. For now, though, it is possible for the pair to continue trading higher within the range. Now it is testing the 113.25 resistance, where a break is possible to initially aim for the next obstacle of 114. As for the rest of today's highlights, during the European day we get the final manufacturing PMIs for January from several European countries and the Eurozone as a whole. The forecasts are for the final figures to confirm the preliminary estimates, and as such the reaction in the euro may remain limited. From the UK we get the manufacturing PMI for January, and expectations are for the index to have ticked down but to have remained elevated above the 50 mark, which separates expansion from contraction. Although something like that may hurt the pound somewhat on the news, as long as the index remains significantly above 50, we doubt that it will affect the Bank of England's optimistic view on the economy. What's more, UK lawmakers will continue to debate the government's Brexit bill in Parliament today, and later in the day they will vote on the motion. Given the heated debate yesterday, we expect market focus to fall primarily on what type of amendments MPs will propose. If Parliament is seen as likely to gain a bigger say over what kind of a deal the UK negotiates, speculation over a not so hard Brexit could support the pound somewhat, in our view. As for the US indicators, we get the ADP employment report and the ISM manufacturing PMI, both for January, but we believe that ahead of the FOMC gathering, these releases will attract much less attention than usual. From Canada, we get the market manufacturing PMI for January, though no forecast is currently available. Besides UK lawmakers, we have one more speaker scheduled for today. Bank of Japan Governor Haruhiko Kuroda will speak to the Japanese Parliament during the early European morning. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.